Hello and welcome back to my channel IQD The World Holds Its Breath. Is Iraq on the verge of a major exchange rate shift? The global economy is at a standstill. Investors, businesses, and everyday people are waiting, watching, and anticipating something big. There's an unmistakable sense of tension in financial markets, a collective pause, as the world braces for a pivotal economic shift. The reason behind this uncertainty? A major change in Iraq's exchange rate. At first glance, an exchange rate might seem like just another number, an abstract financial concept that only concerns economists and policymakers. But in reality, it is the heartbeat of an economy, dictating trade, investments, and the cost of living for millions. Right now, the Iraqi government, led by Prime Minister Mohammed Shia al-Sudani, appears to be preparing for a monumental adjustment in the dinar's value. This shift could reshape Iraq's economic future, impact international markets, and create both challenges and opportunities. But before we analyze what's coming next, let's break down why this moment is so crucial. Why is the world watching Iraq's exchange rate? A country's exchange rate determines how much its currency is worth compared to others. This number influences the cost of imports and exports, the profitability of businesses, the purchasing power of citizens, foreign investments, inflation, and economic stability. When a country's currency appreciates, it becomes stronger, making imports cheaper but exports more expensive. On the other hand, when a currency weakens, imports become costly, while exports become more attractive to international buyers. The uncertainty factor. Why the economy feels frozen. Right now, Iraq's economy is in limbo. Businesses, industries, and investors are delaying decisions. The uncertainty surrounding the dinar's value is making it difficult for companies to plan ahead. Consider this scenario. You're about to buy a new home, but you hear that property prices might drastically change overnight. Would you finalize the purchase now or wait for stability? Most people would wait, and that's exactly what businesses and investors are doing today. This widespread hesitation has a ripple effect. Farmers are delaying the sale of their crops, fearing they might lose money if the currency depreciates. Manufacturers are postponing purchases of raw materials, unsure of future costs. Financial markets are seeing a slowdown in investment as traders wait for clarity. This cycle of uncertainty feeds itself, creating a temporary economic standstill. Evidence of an imminent change. Although speculation is rampant, there are concrete signs that the Iraqi government is preparing for a significant exchange rate shift. 1. Increased government control over financial information. One of the strongest indicators of an impending change is tighter security around financial policies. Governments often restrict access to sensitive economic data when they are preparing for major adjustments. In recent weeks, reports suggest that Iraq is limiting the flow of information about currency valuations and banking regulations. This is a clear signal that the government is trying to prevent market panic before the official announcement is made. 2. Capital flow restrictions. Another major sign of an impending shift is changes in capital flow regulations. The Iraqi government has reportedly been increasing scrutiny on the movement of money into and out of the country. Why? Because investors react quickly to exchange rate changes. If speculators get advance notice of a rate shift, they could move large sums of money, potentially destabilizing the financial system. By imposing restrictions, the government is ensuring a controlled transition. 3. The role of the central bank. The Central Bank of Iraq, CBI, plays a crucial role in setting and stabilizing the exchange rate. Over the past year, the CBI has been actively working to strengthen the financial sector and manage inflation. If the government is planning an adjustment, the central bank will likely introduce new policies to control inflation and stabilize prices. In the past, Iraq has used currency auctions and monetary reserves to maintain a balance between supply and demand for the dinar. The broader economic picture. What influences a currency's value? To understand the potential impact of an exchange rate shift, we need to examine the key factors that determine a currency's strength. 1. GDP growth and economic expansion. A country's currency value is closely tied to its gross domestic product, GDP, the total value of goods and services it produces. If Iraq's economy is growing, demand for the dinar will increase, strengthening its value. However, if growth slows, the currency could weaken. One of the biggest challenges Iraq faces is economic diversification. The country has long been dependent on oil exports, which makes it vulnerable to global price fluctuations. To strengthen its currency, Iraq must invest in infrastructure, technology, and alternative industries such as agriculture, tourism, manufacturing, renewable energy. A well-diversified economy attracts foreign investors, boosts GDP, and strengthens the dinar. 2. Supply and demand. Dynamics. The value of a currency depends on how many people want to buy it versus how many are available. If demand for the dinar increases, its value will rise. If demand falls, its value will weaken. For Iraq, increasing demand for the dinar requires foreign investment, trade partnerships, and economic stability. If global investors see Iraq as a profitable market, they will buy more dinars, pushing its value up. 3. Inflation and purchasing power. Inflation directly affects currency strength. If inflation is too high, the purchasing power of a currency declines. The Iraqi government must carefully balance inflation control with currency stability to ensure sustainable growth. By implementing monetary policies that curb excessive price increases, the government can maintain a stable exchange rate while supporting economic expansion. Potential outcomes. What happens next? If Iraq officially changes its exchange rate, what are the possible consequences? 1. A stronger dinar. If the new exchange rate increases the value of the dinar, we could see cheaper imports. Goods from other countries would become more affordable for Iraqis. Increased purchasing power. Citizens could buy more with their money. Foreign investment boost. Investors might see Iraq as a more attractive market. However, a stronger dinar could also make Iraqi exports more expensive, potentially impacting industries that rely on selling goods abroad. 2. A weaker dinar. If the exchange rate is adjusted to devalue the dinar, we might see higher export competitiveness. Iraqi products would become cheaper for international buyers. More tourism. A weaker currency could attract tourists looking for lower costs. Rising inflation. The cost of imported goods and services would increase. This scenario could make life more expensive for everyday Iraqis, particularly if wages do not keep pace with inflation. 3. A gradual adjustment. The government may choose to introduce a gradual exchange rate adjustment to avoid sudden shocks to the economy. This would allow businesses and investors to adapt over time, reducing market volatility. What can businesses and investors do? If your industry or investments are tied to Iraq's economy, here's what you should consider. Stay informed. Monitor official government announcements and central bank policies. Diversify holdings. Spread investments across different sectors to reduce risk. Be prepared for volatility. Exchange rate changes can cause short-term market swings. Stay flexible. Engage with financial experts. Seek advice from economists and analysts to understand potential impacts. Final thoughts. A defining moment for Iraq. We are witnessing a pivotal moment in Iraq's economic history. The world is watching closely as the government prepares to make a critical decision on its exchange rate. While uncertainty remains, one thing is clear. This shift will have profound consequences for Iraq's economy, its people, and international markets. Change is coming. Whether it leads to a stronger, more stable economy or new challenges will depend on how well the transition is managed. For now, the world holds its breath, waiting for the next move.